Hi guys, so in today's video we'll be understanding how to understand balance sheet. First question, what is balance sheet? Balance sheet is nothing but a statement showing what is that the company owns, this is termed as asset, and how these assets are funded by the company, this is termed as liability. If you noted that I mentioned balance sheet is a statement as on a particular date, and normally this particular date is 31st March. Just as we logically constructed the P&L, let us now logically try and construct balance sheet. Now think of a company like Maruti Suzuki and what would it be owning and how these assets would be funded. Maruti Suzuki would have land and building, plant and machinery. They would have investments in various companies. They would have intangibles like patents or softwares. They would have cash, stock of car. They would have given some kind of advance to various parties. For example, say insurance advances. So this would also be an asset for the company, right? Then there would be receivable from the customer. These receivables are also assets because if the customer don't pay, company may take the car back, right? Then there can be many other assets which can be really termed as other assets. Moving on to the liability side, let me make your life simple over here. Just recollect our episode number 2 about how funds can be arranged. Funds can be arranged in form of equity, debentures or normal loan. Further, funds can also be arranged in form of trade credit. What is that? Trade credit is nothing but temporarily not paying the supplier and using those funds for business purposes. Further, there is one more important source of funds that the company normally use, that is reserves. And that is nothing but the past profits which are not distributed by the company and then used in the business for expansion and growth. This much understanding is sufficient for us to directly jump onto the balance sheet of Maruti Suzuki and understand what we need to look for while making investment decision, starting with the asset side. Here, if you observe, the trend in fixed asset is increasing, implying that the company is investing more money to build more cars. Then there is CWIP. CWIP is essentially construction work in progress and it is normally the plant and machinery under construction. Then there are investments. Investments are nothing but investments made by the company in various other entities or other companies, and this is what is consolidated in the P&L that we discussed last time. In the other asset, I would want you to focus on two key items. One is inventory and second is trade receivable. Inventory is nothing but the stock in trade of the company, in our case the cars, and trade receivable is the amount to be collected from the customers of the company. Both these items are to be correlated with the sales of the company. And how would we correlate and what will we derive by that? So by correlating the inventories of the company, we'll get a ratio about how much percentage of the total sales the company is actually having a stock as on a particular date. Okay, so this will give us an indicative number that the company has so much worth of stock and this can be fulfilled approximately for so many coming days. Similarly, correlating trade receivables with sales will tell us out of total sales what proportion of the sales is yet to be received. Now this is a very important concept because it might happen that the company is just booking the revenue but not collecting anything from the customer, and by correlating this trade receivable and sales we'll come to know that how much percentage of the company's sales is actually received and is actually yet to be received. Moving on to the liability side, here we need to first understand what are the broad bifurcation, and they are essentially what the funds are owned by the equity shareholders and what are owned by external parties like debenture holders or lender or some trade creditors, right? So first thing first, here share capital and reserves both are owned by the equity shareholders. Share capital is nothing but on inception or at the time of fund raise what the amount equity shareholders would have paid to the company, and reserves is nothing but primarily the past profit of the company that is not distributed to the equity shareholders. Then comes the borrowings. Borrowings are essentially the debt or debentures that the company has raised from external market, right? Here, one very typical ratio that we look for is what proportion of the net worth, which is share capital plus reserves, is the borrowing of the company. If the borrowing is too high, then it is a risky investment. This is also called as debt equity ratio of the company, and is very important ratio for us to analyze balance sheet or to make any investment decision. Then comes the other liability. In other liability, again there is one important point of trade payable, and this is to be correlated with the purchases of the company. Remember, this is to be done in similar way as we analyze the trade receivables and sales of the company. By analyzing trade payables and purchases, we would get what percentage of total sales the company has not actually paid. So essentially, what is the number of days that the company is enjoying free trade credit is what we'll get by analyzing trade payable and the purchases of the company. Now, one more important point that I would want you to make note of while understanding the liability side of the company. Tell me, which number would you want to be bigger? I mean, the net worth number, the borrowing number, or the trade payable number? I think you guessed it correctly. It would be the net worth number. Essentially, as an equity shareholder, the more the net worth of the company, the more the equity share value or the book value of the equity share for the equity shareholder. With this, we can conclude the analysis of balance sheet. Over to Mayank. Thank you.
So with this, we wrap up our episode today. Please like the video, share it with your friends, subscribe to the channel, and give us your thoughts in the comment section below. Thank you.